Hi, everyone. Welcome back to Toni on Real Estate Education. A quick shout out to my current students and also to my past students who I know still watch this channel, and I am very grateful for that. This channel isn't just for people who are looking to pass the real estate school and state exams and to become a real estate agent. It's good just for basic knowledge, real estate knowledge, especially if you're looking to buy your own home or if you have your own home. So today's topic is taxes. We're going to talk about ad valorem tax, special assessment tax, and then a true tax. All right, let's dive in.
Now, I want to assure you before we get started that I'm going to explain this in the clearest, most simplified way possible. By the time we're done, you'll not only remember the terms, but you'll also understand them and even be able to explain them to someone else. This will not be a waste of your time. Okay, let's get started. First up, ad valorem tax. Now, that phrase might sound fancy. It's Latin, and it simply means according to value. So the ad valorem tax is just a general property tax based on the value of your property. That's the basic idea. The more valuable the property, the more taxes you will pay. Makes sense, really. So here's a key point to remember for the exam. Ad valorem equals according to value equals general property tax based on the assessed value of the property. Now, who collects this money? Usually your local government, your county, city, town, or village. And what do they do with it? Well, things like public schools, fire departments, police departments, road maintenance, local parks. So this tax helps fund all those community services we rely on. Now let's move on to the second type of tax, special assessments. This one's different. A special assessment, also known as an improvement tax, is not based on the value of your property. It's based on a specific improvement that benefits your property directly. Let me give you an example. Let's say your neighborhood doesn't have sidewalks. The town decides to build sidewalks on your street. The cost is going to be $100,000, and it's split equally among 50 homeowners who live on that street. So the town says, hey, you're benefiting directly from this improvement. We're going to charge you a special assessment of $2,000. That's not based on the value of your home. It's based on your share of the cost of the improvement that was made for your direct benefit. Here's another example. Installing new street lighting on your block. Putting in a new sewer line that wasn't there before. Repaving your specific cul-de-sac. So again, special assessment equals special benefit. You're only paying because the improvement directly helps your property. Here's another important difference. While ad valorem taxes are usually paid every year, special assessments can be one-time payments or broken up over several years, depending on your local laws. So here's a key point to remember for the exam. Special assessments equals improvement taxes for specific property improvements that benefit your property directly. Now let's talk about true tax. This is a term people often misunderstand, but it's actually very simple. Think of it like this. You've got your assessed value and you've got your exemptions, and those two things together affect what your actual tax bill will be. So true tax is basically the real amount you're expected to pay after all the deductions, exemptions, and rates have been applied. Let's go back to that $300,000 house. Suppose there's an exemption that takes $50,000 off your assessed value. That brings your taxable value down to $250,000. So even though your house is assessed at $300,000, your true tax or real tax is based on the taxable amount of $250,000, not the full value. Does that make sense? It's kind of like coupons at a store. The original price might say $100, but you have a $20 coupon. So you only pay $80. That $80 is your true cost. Same idea with property taxes. Your true tax is what you actually pay after discounts and exemptions. So like I said in my introduction, understanding property taxes is crucial not just for the real estate exam so you could become a real estate agent. This is for everyday real life. Okay, folks, so stick around. I have some practice questions coming up next. What does the term ad valorem mean? A, property insurance rate, or B, according to value? The answer, B, according to value. Which of the following best describes an ad valorem tax? A, a flat fee charged by the government. B, general property tax based on the value of the property. The answer, B, general property tax based on the value of the property. Which of the following services are funded by ad valorem taxes? A, public schools. B, independent contractors. The answer, A, public schools. Taxes that are based on the assessed value of the property. A, ad valorem taxes, or B, special assessment tax. The answer, ad valorem taxes. What does ad valorem translate to in English? A, community tax, or B, according to value? The answer, B, according to value. What is another name for a special assessment tax? A, improvement tax. B, ad valorem tax. The answer is A, improvement tax. How is a special assessment tax determined? A, based on the assessed value of your property. B, based on the specific improvement that directly benefits your property. The answer is B, based on the specific improvement that directly benefits your property. Which of the following is an example of a special assessment tax? A, annual school tax. B, sewer line installation for your street. The answer, B, sewer line installation for your street. Which statement best distinguishes a special assessment tax from ad valorem tax? A, ad valorem is based on property value. Special assessment is based on specific improvements. B, ad valorem is a one-time payment. Special assessment is always annual. The answer is A. Ad valorem is based on property value. Special assessment is based on specific improvements. What does the term true tax mean? A. The assessed value of your property. Or B. The actual tax amount owed after exemptions applied. The answer, B, the actual tax amount owed after exemptions applied. If a house has an assessed value of $300,000 and has an exemption of $50,000, what value is the true tax? Is it A, $250,000 or B, $350,000? The answer is A, $250,000. Which of the following best compares true tax to everyday life? A, getting a coupon discount and paying the reduced price, or B, paying for groceries in cash instead of credit? The answer is A, getting a coupon discount and paying the reduced price.